Good morning, everyone. This is Dan Cook with Nadex. I am not Todd Rich, sometimes confused for him. We've got Brian Caprice again this morning. Apologies if you tried to join us yesterday. We had a bit of a technical issue that was out of our control with the vendor that does the streaming service for us. But we are back today, and we've got a lot of movement. Brian, we're going to jump right into it because I know we've got a ton of stuff to talk about.
Yeah, there's a bunch to talk about today.
So I mean, look at that chart.
yeah. Did that give anything away? So yesterday we mentioned, and we had the afternoon session yesterday. If you were to attend that one, we talked about CPI, how it's been such a big, important kind of news release. It's considered part of the top 5. And yesterday we had the CPI for the United States, and it came in well above. And we saw the reaction was, obviously very predictable when you had that type of inflation. We mentioned today was going to be important. We had testimony coming in, but we mentioned that CPI year over year for the pound was going to be, again, another one of those telltale kind of not easy to read, but one of those things that is probably more predictable than not. Well, the forecast came in higher than expected. Again, not shocking. I think it came in higher than what they originally thought. And again, same type of trade setup. You can see that the pound dollar up 71. You can see the pound yen up 54. The euro pound down 35, showing pound strength across the board. So if you guys did not take advantage of that, it's because you're not watching, you're not listening, and you're not following the trends that are out there. Very, very predictable. We mentioned PPI. Just came out a little while ago. As with yesterday, we expected this to come in. And again, if you get confusing with CPI, PPI, EIA, and all the other different releases out there, the API numbers, the ADP numbers, there's acronyms for everything out there. But again, this is another one of those, and you can click on it to always see. It's a leading indicator for consumer inflation. Remember, this is transient inflation, right? Is supposedly what we're being told. But again, it's still adding, right? If we have 0.5 plus 0.6 plus 0.2 plus 0.1, if it's all positive, it's not transient, it's not disappearing. Well, when you come in at basically double the core rate, it's definitely here. Right. So I'm not exactly sure why Powell is doing this. Right. It's I'm not exactly sure who's telling him what or what he's looking at. But July was supposed to be the month. They said it. July is where we would see, inflation go back again. And all I see is an acceleration of inflation. It's just getting higher and higher and higher and higher. Now, Powell is speaking today, and Powell's comments, his opening comments, have already been kind of disseminated. And this is what we're going to hear today. And again, you can click on there. This came out from the federalreserve.gov. This is not an opinion article. This is not a translation. These are his words, talking about how household and business balance sheets are quite strong. Core financial institutions are resilient. Strong job gains are expected to continue in the coming months as the health crisis continues to ease. Inflation is likely to remain elevated in the coming months. Wait, what happened in July, Jerome? And then before easing, right? Expectations are broadly consistent with the Fed target. Now, again, he said it's transient. July is where we should see it, and it's double now. So I'm not exactly sure what expectations that he's talking about. Talking about we're going to continue to support, powerful support. Again, now they're throwing in crazy adjectives, so I'm not sure how much of the political sway is kind of taken over. But yet we're still a ways off from progress. So we're not going to taper bond buying. We need to keep this going higher. And again, talking about it. So I mentioned a few months ago, and we brought it up a few times, that the Fed originally, when it was created, was to save the United States, basically the economy. It was a bunch of, for lack of a better description, it was basically all the rich families came in to save the United States by helping regulate monetary policy. It was originally a third party. It had no political ties whatsoever. It was there basically to keep the economy running, and again, so we had a functioning economy. Now, again, the last 2 administrations have tried to get more and more control. They felt like the government, in all their enormous amounts of honesty, should be the ones that control it, even though when it was third party, it didn't have political affiliations. Now, all we're seeing is a distribution of wealth that is kind of changing things around. So I feel that today the testimony is going to have to get interesting. We mentioned yesterday that, again, with elections starting to come up in the near future, senator seats in particular, you got to make sure that your base is represented. If you look at, and again, we talk about a distribution of wealth and where there's a problem, we're seeing the indices across the board at all-time highs. ES, you're seeing kind of popping up again and again, expected from what we're seeing from that news. You're seeing NQ get up there as well. You're seeing YM up there. Wall Street is on fire. With these rates, it's going to continue to go this way.
I mean, Brian, I'm just baffled.
Yeah,
we've got indices at all times high. We've got estimated 2.3 trillion in cash sitting on corporate books.
Yep. Everybody nobody's prepared for it, but yet they're going to continue to support at this level, and yet they're going to do absolutely nothing with interest rates. And if you talk about, traditionally, if you talk about who is most invested in Wall Street, it would be the rich. Yes. When you talk about who is typically not, it is typically the families that are living paycheck to paycheck. It would be considered the lower, the lower income, and lower middle income, families in the United States. We have a political party in that is supposed to distribute the wealth evenly, and yet they're keeping policies in that are doing nothing but making Wall Street people get richer, the rich get richer. And I'll tell you right now, inflation is one of those things that people that have a lower income base, it affects them the most. $4 gallon of gas, meat and bread products, twice the price that they are. That hurts the common person. So, again, the rich don't care if they're spending $3 a gallon or $4 a gallon for gas. The guy that's living paycheck to paycheck that has to pay double, that hurts. But yet it doesn't seem like they're acknowledging any of those factors. So, like I said, I am just as baffled as you. I'm not sure where it's going to go. As far as what we can do as trading wise, because he's making these statements, and again, we'll see what he talks about later today, saying everything that he's saying here. I feel that we need to be bullish today in the overall indices. I mean, the European market felt the same way. You can see this is the European Open in the Dow. Here's the ES, same thing. We had that pullback from yesterday, right? A lot of profit taking. And then we came back to that same exact level that we talked about was going to be the area where new buyers were stepping in. And the European market has done nothing but send this higher. And based off of, the comments, the PPI data saying, hey, we got it, but we're not doing anything. We're not going to taper anything. It's continuing to rise, which it should, which makes complete sense. Now, the question is, where can we catch this one to go higher? And, I think 4,400 is still a target. I think depending on what he says today, that could be an overall target for something later on today. Now, maybe he throws a surprise wrench in this whole thing, and his first statement is about, we're looking at raising interest rates sooner, and then everybody's going to be like, but that's not what you said hours ago. So I definitely think today is one of those days where, binaries, something with low risk is probably going to be a better kind of option out there. Powell's not speaking till 12. So it's one of those things that we have a little bit of time. We can see what the open looks like. We can see where kind of that 10 o'clock, 10:30 level is coming in. Again, 10:30 is a reversal area or reversal time. We may come up and end up basing through this level, and that could be our launch point. Maybe a break of 43.83 is our launch point. And again, we've seen some basing. We've seen some sellers come in there in the past. So anything that comes up and bases in this level, if we don't start to reverse at 10 o'clock, after all this, the profit taking comes in, that could be our launch point. And again, maybe we run all the way up to 1400 from now till the open because people are so excited for this. But I would say overall today, I think you gotta be looking to say, hey, they're not tapering. Where do we find these? Where do we find the pullback to get long? Because these are all going up to new levels.
Brian, and I want to make a quick point on what you said because I think it's really important. And you and I talk a lot about risk management, but today could be a day with the movement where you're not looking for a premium collection type trade. You're not looking to buy a binary at 80 because you can get smoked so quick. What you want to do is you want to look for a lower risk, lower dollar amount.
Yeah.
And here's something key because it's a huge mistake I see all the time. Somebody will buy a binary at 25, wanting it to go to 100. There is nothing wrong with buying at 25. And if it goes to 50, 60, 70, getting your profits because it can change quick today. Like you said, Powell threw out these notices of basically what he's going to say. He can change between now and then.
Yeah, think about the testimony again. If you look at kind of the political situation right now, the news is driving so much of this. It's only going to take one random comment from somebody and something that Powell says that can be twisted in a little bit of a way, and all of a sudden, like, oh God, that's really, really bad. We didn't think that before, and it can turn and flip back down again. So, I would say, this is one of those days where I think there'll be a lot of money, made in the markets today. I think futures traders will have a field day, but at the same time, there will be a lot of people trading futures today. They're going to lose a lot of money very, very fast and be like, I don't know what just happened. How did I just, just because again, the volatility based off those statements. So, like I said, I think binaries may have the cheapest entries today. The call spreads may not be bad. And again, if there's any knockouts close on, particularly the indices, I would be cautious because, again, there definitely could be whipsaw back and forth today. So what I would say is I would look at those shorter duration binary contracts. If you can jump in, and again, the 20 minutes may be a little bit riskier because, again, you don't know when that one statement is going to be. But if you're able to play something like the 2 hours, those may not be bad, or closer to the end of the day, I think they'll be pretty hot too. And again, remember, he's speaking today and tomorrow. I don't know the order of who's asking him questions of when. I'm sure you could probably find it out there, but kind of watch out for those. Now, in regards to kind of what we're talking about with inflation, remember, inflation goes directly over the dollar. We're not trading the Dixie, but you can see this is the dollar right now. Here's actually the European session open, and you can see there was a lot of kind of whipsaw, and this is a 15-minute chart. A lot of whipsaw back and forth, but we've reached up to that level where we had a gap yesterday, and it's been nothing but straight down. And you may say, wait, why is it going straight down? Well, a lot of it has to do with the Fed's indecision. They're seeing inflation. They've basically said they're not doing anything. But if they do make a comment, if Powell doesn't say anything today, this is exactly what it should do. If Powell says something about, okay, yes, we're acknowledged there's inflation, it's higher than we thought, we will look to start, controlling this so it doesn't, anything that is hawkish, that will send the dollar higher. But remember, if you're interested in buying the dollar, remember, if he says nothing, it's fine if it's down here. If you're going to buy something, you buy low and you sell high. So again, the Europeans are shooting this thing straight to the downside, looking for areas. And again, we do have a level a little bit lower. Again, we're not trading this, but just be aware at this 92.32 level, that's an area where buyers have stabilized. And again, the last time it hit that level, we had a large explosion in price out of it. So, we talked about the pound. I think the pound dollar is an easy one. That's approaching levels up top. If we may have an area to sell up here around 139, that could be a potential level for a pound short. Dollar CAD is one that's very important. Again, dollar CAD is dropping very, very fast. Reason I bring up dollar CAD is we do have some levels, but this one was a little bit harder because we had so much chop where it keeps hitting down and kind of basing itself. We talked about 124.50 being a short entry, or I'm sorry, a short target. We literally just hit that a while ago, so we can't do much with it. But I would say probably in this area is where we're due for a bit of a reversal. Just the profit taking overnight. The reason why I say this is because, again, the CAD has their monetary policy report. They were the first to talk about removing a lot of these tapers out there. The question is this PPI number way too strong of a miss to really have it affect the dollar CAD position? So I think that one may be a little bit more challenging. But again, this movement, this is very important to understand, guys. This is 76 pips worth of movement since 5 o'clock this morning. If you look at the daily ATR, basically the average of what it moves in a day, it's only 90, right? It's 90, and some of that came in from today. So this is a lot of movement, very, very fast with blockbuster news coming out for them. So again, there is potential reversals here. And then, I had it up there. There's your dollar yen. No movement, dropped all the way down, and we got an area where we have basing. So again, there could be a potential reversal here for the same thing. Getting the dollar really, really weak. Powell says something that is hawkish. We have a pop. And again, ways that you play the dollar yen. With the way that it moved here, you could be looking at binders on this one. You could be looking at call spreads. Be a little bit more cautious, as I said, with the knockouts, only because, again, if we have some whipsaw back and forth, if you have some candles like this, it could get very, very challenging today with this one. But again, I would see where we start to stabilize, and I think that could be a good area to establish your risk level. And then try to get in there with some of the shorter duration once Powell starts speaking. That could be a good kind of roll to the top side. Last but not least, I want to make sure that we do cover oil as well. Here's oil. Now, actually, we should extend that. It's the 830 candle, the new one's printing. Oil really wasn't doing much. We had that big move back up yesterday. We talked about kind of that little big situation. Really didn't much in the overnight. And then all of a sudden, it was set up for a very, very kind of small overnight. And then we hit the 7 o'clock candle. And all of a sudden, it spiked right down and came literally straight back up again, kind of whipped through a lot of positions. And where it turned is an area where we saw buyers, but it kind of set us up for kind of an interesting piece here. Now, talking about strong recovery and PPI, all that is actually technically good for oil. Recovery means more people will be driving, there'll be more demand, more people working. That all tends to be good. So, the way that we play oil typically is we need to get in there. 9 o'clock is too early to do the analysis. But what you guys need to do today is get in there at 10 o'clock. Kind of see where some levels are. We know we have a kind of a minor level here. We know at 67.20 we have a larger time frame zone. We got to see where price is going to be right between that 10 and 10:15 time period. See if we're pulling into like a 15 or a 30-minute level. And then what we're looking for is price to stop. See how price is kind of stuck right here, and it's been that way for like 15 minutes? That is the trigger that's going to let us know most likely which direction it's going to head into. With everything going on with OPEC, again, I would expect some movement. Right now, it's trying to pull back in. You guys can see here on the 5-minute. Here's that 10-minute window, right? We went all the way up to 75.18, dropped all the way down to a 74.07. Again, a dollar movement, and then within 10 minutes, we were back up to exactly where we were before. So this tends to be them clearing orders top and bottom to kind of give it more room to run. So I would say today with the comments, I think oil probably will be a big mover today. But like I said, I think Powell can really move this around a lot. But again, talking about how strong recovery is should be positive for oil. And if we can get up a little bit higher, I'd be looking for maybe a short trade later.
Appreciate it, Brian.
And don't forget, 9:30 p.m. tonight, Australian unemployment and unemployment rate data. That will be a good one as well.
We've got a lot of movement coming in today. Real quick, and I forgot earlier, apologies, compliance, but I forgot to remind everybody that trading involves risk. Today is one of those days, and we talked about it. You want to keep your risk low in these events. It can really whip around. Don't be afraid to lock in profits. You don't have to wait for expiration, but understand you put money into a market, whether that be Nadex or anywhere else, you can lose that money. Now, no margin calls at Nadex, so that's a really nice thing. But we've talked a lot about the markets today. Just want to remind everyone, I think the physicist Niels Bohr said it, prediction is very difficult, particularly when it's about the future. So understand that this is for educational purposes. We're here to help you out, show you some great analysis by Brian. Please don't take it as a trade recommendation. Do your own analysis, do the work, take accountability for your trades.
And guys, if you are opposed to risk today, let me just close on this one. If you're kind of scared because Powell is speaking and you're very risk averse, go trade that 9:30 p.m. Australian data tonight. Again, a lot of the volatility and everything will be sucked out of the market. It'll be more a traditional news release, and it's a great way to get in there. And if you've never traded it before, switch over to demo and trade it over there to see how it works for you first before we put live money on the line.
Great point, Brian. And if you want to reach out to us, customer service at nadex.com. Follow us on social media. And questions about the analysis, you want to talk to Brian, pick his brain, support at keeptradingsimple.com. Obviously, you know he's a great guy. He does this every day just because he's a great guy and wants to help everybody out. So really appreciate it, Brian. It is fun. Love talking about the markets, particularly days like today. And we'll be back tomorrow, same time. So please catch us then. Thanks, Brian.
Yep. Take care.